you're a CPA firm, you can act in a solicitor capacity, which would be, you're simply referring business to another investment advisor. That may be complementary to your business, but you're not necessarily, managing the assets of those clients. If there's a good fit there, you're referring to an investment advisor firm or other investment advisor firms, which you can receive some kind of commission type model.
Welcome to AFO Wealth Management Forward, a podcast about finance, accounting, technology, and entrepreneurship. We apply our decades worth of experience and insight into what makes businesses work, so we can help others grow both personally and professionally. In this ever-evolving marketplace, we help accounting firms and financial advisors grow their practice through the adoption of holistic wealth management services. Learn from industry leaders and subject matter experts to unlock the secrets of their success. A podcast that shows people and companies the transformative power of technology so they don't fear it, but instead harness it. Don't fight the robots, team up with them. And here are your hosts, Rory Henry, Director of Business Development, and CEO Rob Santos of Arrowroot Family Office.
Hello and welcome to AFO Wealth Management Forward. Today we are being joined by Scott Terra of Connexion. Scott has over 18 years of experience in the financial services industry. He works with FINRA broker-dealers and with the SEC and state investment advisors, focusing on registration, governance, risk management, and compliance matters. He was an examiner at NASD Regulation, Inc., now FINRA, where he conducted comprehensive examinations and investigations of FINRA broker-dealers for compliance with federal, state, and SRO rules and regulations. Scott, welcome to the podcast.
Thanks for having me, Rory.
All right, and we're joined by Rob Santos. Rob, how you doing?
Hi, gents. Doing great. Great to have Scott on.
All right. So, Scott, let's start out here, and why don't you give us a background and tell our audience about Connexion and yourself and what you do?
Sure. So, Connexion really is a three-tier platform. We kind of focus solely on the financial services industry. Our first kind of marketplace or platform is as an expert marketplace. We have this expert marketplace to really connect financial service firms such as investment advisors, broker dealers with our network of service providers, consultants, experts, and compliance professionals. If we're a financial service firm and you need help with a particular compliance project, you can go on our platform and we'll connect you with the right compliance consultant that can get your project needs addressed. We have a second platform, which is a digital library. This is really a comprehensive resource library out there for not only access to federal and state securities forms and documents and checklists, but we also offer free to fee-based documents that are really resources for firms to tap into from a compliance standpoint. Forms, checklists, documents, white label products they can customize and align to their particular size, scope, and function. And then lastly, we have a self-publishing platform that allows our service providers on the compliance side to post white papers, position statements to really kind of elevate their footprint in the industry, which is posted on their profile for financial firms to see. So we're really focused primarily in this space, and it's working well so far. Been in business since January of 2017, so going strong.
Great. All right, I want to make sure our audience is clear on some definitions as we get started. Can you explain what an investment advisor is, and then also what an investment advisor representative is?
Sure. So in the basic sense, there's really a three-pronged test to this, and the regulators see this as any person or entity that holds themselves out to the public where they're providing or offering investment advice for compensation, right? So there's really a three-pronged test here. The regulators and the firms should really look at it from a standpoint of, do they hold themselves out to the public as an investment advisor or offering investment advice to the public? Are they getting paid specific to the advice they're offering to their clients? In other words, if I'm giving advice with respect to securities or investment products that are specific to a prospective or investor's set of circumstances, that would be the second prong test. And then third, if I'm getting paid for those services or that advice, and that really is the general definition of what makes up an investment advisor. The investment advisor has to be registered first and foremost as a firm whether it's with the SEC or the state. And then the investment advisor representatives would be those licensed individuals that are acting on behalf of that entity to offer advice specific to those clients.
Got it. Scott, I'll hop in here. First I'll say thank you so much. We actually worked with Scott when we started our registered investment advisory practice, as well as our broker dealer. And so it was just absolutely fantastic working with Scott, continuing to work with Scott and his team. Scott, could you maybe just spend a second and talk about your experience and the growth in the registered investment advisor kind of space that we've seen in the last kind of 5 to 10 years?
Yeah, so we've seen really a tremendous migration from the broker dealer side of things, where there was approximately 4,500 broker dealers and about 19,000 investment advisors, state and SEC collectively nationwide. And so we've seen a kind of a migration over time from firms deviating from the commission model of the broker dealer and really going towards a fiduciary type model where they're managing client assets, really kind of operating in much more of a high touch position where managing the portfolio and the client assets is something which is a closer relationship to the end client, and tends to be, I think, there seems to be a transition towards that, not only from a regulatory standpoint, but also from just a customer relationship management standpoint as well.
Yeah. We obviously were part of that wave. A lot of folks at Arrowroot Family Office and various affiliates that we have worked at much larger firms that were associated with broker dealers. And we've really seen a lot of clients demand that fiduciary standard and look for it as well. And a lot of folks on the podcast are accountants that are thinking about becoming registered investment advisors, or at least affiliate with another investment advisor. Could you maybe talk about, before we talk about starting their own RIA, maybe some considerations that some accounting firms should take when they're thinking about it from a regulatory standpoint about associating with a registered investment advisor or a broker dealer?
Sure. So I think a lot of firms, it seems to be a natural kind of track for CPA firms to consider this. It is, they are in this space of giving advice. Seems to be a natural progression to kind of move into the investment advice or advisory arena. And it seems to be complementary to their practice, whether it's taxes or investments and things like that, or audit work. And so I think some of the considerations are what space do they want to be in, right? So there's several different tracks about, if you're a CPA firm, you can act in a solicitor capacity, which would be, you're simply referring business to another investment advisor. That may be complementary to your business, but you're not necessarily, managing the assets of those clients. And if there's a good fit there, you're referring to an investment advisor firm or other investment advisor firms, which you can receive some kind of commission type model. Other firms can associate with, other CPA firms can also associate with broker dealers in a capacity, or they can take the route where they want to be registered, where they're either starting their own practice or affiliating in a registered capacity with an existing investment advisor. So all of these come with it, pros and cons, right? We have situation where if you're acting as a solicitor, you can maintain this is really for firms or CPA firms where they want to maintain their current practice. That's their core competency. And they have a situation where they want to add complementary services, but not necessarily be registered and involved in that capacity. And so they can still offer advisor firms that can offer advice that they may need, so they can fill that niche, but also receive compensation. They can also go the route of affiliating with an existing firm where they may need to get registered depending on the circumstances, and they can offer their own investment advice. But there are, some conflicts of interest that come with that. So it's a matter of how you handle that, how you disclose it, things of that nature. So there's different tracks that a CPA firm can consider in getting into this particular space.
Yeah. And, we obviously have our wealth management forward program where we're trying to, assist accounting firms and going through that. But even for folks that aren't signed up for that course, we really suggest before going into this realm of either being a solicitor or becoming an RIA, talking to somebody like yourself, Scott, before you start marketing it, before you start talking to people about it, or certainly before you start to have clients make any kind of activity, is talk to a compliance expert like yourself.
Yeah, and I also think it's good to reach out to the AICPA as well, that has its own kind of governing body and code of ethics and things like that, so you can make sure you're kind of operating within the framework of their body, but also looking at other regulatory considerations before moving in that direction.
Absolutely.
And speaking of regulatory conditions here, Scott, can you touch on Rule 206-4-1, the modernized marketing rule that becomes effective on May 4th? And it's my understanding this creates a single rule which replaces the current advertising and cash solicitation rules. Can you kind of break down that new ruling and what it means?
Sure. There's a lot of moving parts to that, but I'll try to paraphrase here. So this rule came out. It's effective May 4th of this year. It is a pretty sweeping change with some of the advertising regulations we've seen in the past. SEC has basically looked at this and said, look, we've had existing marketing or advertising rules in place for many years. They haven't changed. They've been rather stagnant. And yet the landscape has changed in terms of how advisors are reaching out, communicating with clients, prospective clients, existing clients, heavy use of technology and the social media landscape. So I think in reaction to this and kind of being more up to date with the rules and aligning this with current landscape, SEC came out with this rule, which really just modernizes the rules, right? It breaks down the definition of what is considered advertising, which is any really communications that are more than one person. So this is kind of a much more of a broad definition of advertising. It does include the use of technology, social media platforms, things of this nature, which weren't addressed prior to that. But I think most notably for CPA firms would be that it really kind of removes, with this new rule, it really kind of removes the cash solicitation rule and kind of wraps some of those requirements and updates it under the use of compensated testimonials and endorsements, right? So in effect, what a lot of CPA firms will use by way of a solicitor arrangement with an existing firm really goes away, and it's replaced by the general advertising rules that kind of encompass all of these requirements, which they say that if an advisor firm is going to be compensated or compensating a person or entity for use of testimonials or endorsements, there are certain disclosure requirements that need to be in play that at the time that the testimonial or endorsement is made, and there needs to be certain disclosures as to whether or not the testimonial or the endorsement is by a customer of record, an existing customer, or a person other than a customer, how the cash or non-cash compensation is, if there's any cash or non-cash compensation provided as a result of that testimonial or endorsement, and also talking about any material conflicts of interest, right, as a result of that relationship. So if there is a relationship between that promoter, that the SEC uses the term promoter of the advisory services, and that advisor firm, and they're getting paid for making that testimonial recommendation, then that should be disclosed as well. So there are some differences in what we're used to seeing at the old cash solicitation rule or soliciting agreements and what's in play currently. So and depending on, there's a lot of moving parts of this, but not to get too much in the details, but you've got situations where the SEC says if there's compensation less than $1,000 for within a 12-month period, then that's considered de minimis, and there's no need for an agreement. Anything above that threshold, you would need to provide a written agreement that kind of spells out the terms and conditions of that endorsement. And these are all things that really kind of replace and are updating the old solicitation requirements, right, from the cash solicitation rules.
Got it. And Scott, so we also talk about in our program, we kind of lay out the 3 different paths that people can do, in order for accounting firms to start incorporating some holistic wealth management services in their firm. One of them as kind of fully outsourced, you're just referring out to someone.
Right.
Secondarily is maybe doing some in-house and some outsource. And third is kind of, looking to bring the full RIA in-house. Could you maybe just spend a second talking about the need of maybe just using a solicitor's agreement and what states that kind of works for?
Sure. So there's a couple different things at work here, right? We kind of bifurcated by federal requirements and state requirements. So when we talk about federal requirements, there's advisors at the federal level which are managing 100 million in assets under management or more. Anything less than that really defaults to the state, and we're really dealing with a patchwork of regulatory requirements, right? Each state has their own specific requirements. There are a handful of states, I think, for example, California is one of them, where you can operate in a solicitor capacity, for example, without triggering registration requirements. But there are certain requirements that the advisor firm for which they're working with that solicitor has to make certain disclosure requirements. In other words, you don't have to meet the registration requirements, but that advisor firm would have to file a particular filing similar to a U4 filing to notify the regulators that these solicitors are acting on the advisor's behalf, right? And depending on the state, some states say if you are acting as a solicitor, that is deemed to be an investment advisor by definition. And so we require, which triggers the state requirements for registration. So it all comes down to state-specific requirements. But I think the one that requires, the channel that requires the least amount of complications would be the solicitor arrangement, right? Which is, you are acting as a solicitor on behalf of another advisor, where you're referring business or soliciting on behalf of that advisor for which you're receiving some form of compensation, right? That may be a case where there's a CPA firm that has clients that need particular help in the area of investments. They don't currently offer those, so they build a relationship with one or more investment advisor firms, which they refer those clients to meet those needs on the investment side of things.
Got it.
That would be the first channel.
Yeah, and so we always try to underline the fact, because there's a lot of folks from across the country that are on the call, and they may be in one state and have clients in another state, and we'll have a conversation with them, and they say no problem, I have a solicitor's agreement with XYZ firm and it's all fine, and then they realize that the amount of clients that they might have in another state actually does require a registration within that state. And so again, we really just want to highlight to people that before they start to offer these services, talking to someone like yourself is really, really important to make sure that you are running correctly with the state and potential federal guidelines as well.
Right. I think that's a good point to note too, because if you're dealing with clients in multiple states, if you're sitting at the state level, meaning you may be soliciting or referring business to investment advisor, maybe that's a state advisor, right? There's what's called a de minimis exemption, right? And there's a federal de minimis exemption at the SEC level, and then there's a state. Every state has its own de minimis exemption, but basically that is that the states don't deem you to be big enough, if you will, to trigger registration requirements in that state if you have fewer than 6 or fewer clients within a 12-month period, and you have no place of business in that state. So, for example, if I'm an investment advisor in the state of California and I want to do business in another state, then it really you have to look specifically at the amount of clients you have and whether or not you have a physical presence in that state, whether there's a registration requirement to be licensed as an investment advisor.
Yeah, and we in addition to talking to someone like yourself before you go through this, we also try to tell everybody that the investment advisory firm that they're working with to make sure to ask these questions, after they're or before they're entering into these agreements with that investment advisory firm, to make sure that they're taking care of those requirements if needed, if there's any kind of registration need or not, and how you fit into that before you get into those kind of relationships.
Absolutely. Yeah, there is, I think, a amount of due diligence process that would go into this, right? Not only looking at it from a standpoint of from the CPA to the advisor, but also advisor to CPA to make sure this is a good fit. The advisor, if they're offering services, that the advisor will be acting as in a solicitor capacity, if that's truly a good fit for their clients and meeting the needs of their investments. But also looking at it in terms of whether the investment advisor has any reportable disclosures, and making sure that I think both parties go through the due diligence process to make sure this is the right decision.
Yeah, and maybe we can step back as well, Scott, and talk about the exam requirements for IAR and an IA. What are needed as far as passing exams for both those?
So there's some basic requirements that if you are acting in the capacity of a registered advisor, then you are looking at it from a standpoint of licensing requirements, which generally most states, and again, it's somewhat of a patchwork of requirements, but the common theme seems to be with most states is that you should have either a Series 7 and a 66 combined will allow you to operate in a registered investment capacity, or a Series 65, which is a standalone exam, or you can operate as an investment advisor by way of an exemption, whether you have any designations like a PFS, CIC, Chartered Financial Consultant, designations such as that, or you can be grandfathered in, which is generally reserved for those who are maybe affiliated with a broker dealer, acting in such capacity with a broker dealer or investment advisor for I believe it's 2 years with continuous employment. And I think in some cases you can be grandfathered in without triggering any licensing requirements. But those are really the three typical standards that you would apply to somebody that's looking for licensing or qualification.
Got it. Great, Scott. And and just one quick thing to talk about. So for accounting firms that are looking to start their own RIA, other than obviously reaching out to someone like yourself to help them understand all of those requirements, can you maybe just from a 30,000-foot view, some of the regulatory and compliance considerations that they should start thinking about, both from a responsibility standpoint, but also operationally before they start to go down that road?
Sure. So there are some, if they're acting in a solicitor capacity, which to Rory's point earlier, a lot of these solicitor arrangements will be kind of morphing into something somewhat different effective May 4th. The SEC has really given this transition period from May to November of 2022 to kind of move into full compliance with the updated or modern advertising rules. So you have a little bit of time, but I think if you're acting in that solicitor capacity, it's something where you want to look at it from a standpoint of having appropriate books and records in place, right? Do you have the necessary documents, disclosure documents, pre-advertising rule? Are you operating under the solicitor rules? Are you giving the disclosure documents as required, the Form ADV? Are you maintaining books and records in accordance with some of the requirements? So really looking at it from a federal SEC requirement standpoint in terms of books and records, or a state-specific books and records requirement standpoint in the solicitor requirements. If you're looking at moving into affiliating with another investment advisor firm, there are certain requirements that you have to go through. Again, books and records requirements, certain operational requirements that you have to comply with if you're affiliating with another investment advisor in a registered capacity. Or if you're starting your own firm, there's certainly compliance requirements, registration requirements, filing requirements, both at the firm level and the individual level, not to mention ancillary requirements like fingerprint cards and things like that, which all require fees and timing of filings and reporting to the regulatory to the specific regulatory agencies for which you're requesting approval. So there are a lot of considerations. A lot of it are, do you have the operations to accommodate the added practice or added operations? Do you have the books and records necessary for meeting the compliance requirements? And all those are spelled out, I think, in not only the state regulatory framework but federal requirements as well.
Yeah, absolutely. And as somebody that we started our own RIA, we've spoken to a lot of accounting firms that have come right out of the gate and they just want to start their own RIA. And usually our advice to them is slow down a little bit, maybe start in a solicitor's agreement to get familiar with not only the business practice, but also the regulatory frameworks, and take a lot of time to think about it because of those needs on the compliance side and the operations side. And a lot of the accounting firms are already pretty busy doing their compliance work for their clients. And so being really cognizant of that trade-off between the responsibilities you're taking on in-house versus partnering with someone is a major consideration that we try to tell people to think about before going straight into starting to do an RIA.
Right. I think for a lot of smaller CPA firms, in terms of staffing, that may make more sense to operate in that capacity rather than starting their own firm or affiliating with it in a registered capacity, because a lot of firms, there's added costs associated with the regulatory compliance side of things that they're going to need to maybe hire staffing to deal with that or outsource it, all of which is a cost. And some firms can bear the brunt. Other firms, I think it's a bit of a stretch. So I think to your point, to ease into that particular position and see if it's the right fit, I think it's always best to slow it down a little bit and test the waters and see if it's the right move.
I've got another question here. Unless Rory, you got one?
I can now. Go ahead, Rob.
Okay. So, while we're kind of wrapping up here, Scott, could you maybe just touch briefly on some hot items that SEC and FINRA are really going out there and looking at? We've been reading in the news about elderly abuse was one area. Obviously everybody remembers Madoff, who just passed away this week. But what are some of those kind of big ticket compliance items that they're really focusing on out there?
Yeah, I think some of the focal points we're seeing lately are coming in the areas of transparency and disclosures, right? So whether you're operating in a kind of a solicitor capacity or an investment advisor, regulators are looking very closely at firms and their disclosures and how transparent they are with their fees, their relationship with their clients, conflicts of interest in particular. Those things are, I think, at the forefront. With a lot of what's happened, not only in the pandemic recently, but in the past, you've seen a focus on cybersecurity. Advisors are looking really to protect and provide sufficient safeguards for sensitive information that you house on behalf of your clients, right? So that's whether you're an accounting firm or your investment advisor firm. A lot of us have that information that's sensitive in nature. So to provide sufficient safeguarding measures to make sure that information is protected. There's also outside business activities. So invariably what we see is, in regulators, what they see has to do with advisors who are maybe running a practice and have one or more outside business activities that may be complementary, whether they're on the brokerage side, whether they're on the insurance side or the mortgage side, real estate, what have you. It's making sure that those are properly disclosed so that you're fully transparent with conflicts of interest, things of that nature. And I think that's it. I mean, you had mentioned the elderly abuse. I think there's an added focus on that concerning clients that may be getting older in age. There's issues related to just handling clients that are moving into that particular period of their lives, right? So making sure and continuing to offer quality services without taking advantage of obviously anyone in that capacity.
Got it. No, that's been exceptionally helpful. And as we're starting to wrap up here, I'll remind everybody that's listening that if they want to learn more about what we've been talking about and they're interested in incorporating holistic wealth management services into their current practice, to reach out in regards to our course. But what's the best way for them to get a hold of you, Scott, or find you?
The best way is just to go on our website, connexion.com, and contact us page. They can reach out and ask any questions. Happy to help out.
And we'll put all the information in the show notes as well for you, Scott.
Perfect. Thank you very much.
Thank you for coming on, Scott. It's very informative.
All right. Thank you, gentlemen.
Thank you, Scott.
Thank you.
All right.
Take care.
All opinions expressed by Rob Santos and Rory Henry on this website podcast interview are solely their opinions and do not reflect the opinions of Arrowroot Family Office LLC or their parent company or affiliates, and may have been previously disseminated on television, radio, internet, or another medium. You should not treat any opinion expressed by anyone as a specific inducement to make a particular investment or follow a particular strategy, but only as an expression of their opinions. Past performance is not indicative of future results.